Guest has created a marketplace in the fintech space. In fact, this marketplace enables the matching technology to pair the right funding institution with the right lending program for faster and better service. But I'll get our guest to explain this in more detail and what predictable revenue growth looks like for them in just a bit. Hello and welcome to the Predictable B2B Success podcast brought to you by Sproutwith.com. I'm Vinay Koshy and our guest is Michael Barnett. Michael, you're a serial founder, a strategic leader and passionate investor. You're really keen on revolutionizing the financial services industry. In fact, you bring over 2 decades of experience in senior leadership positions within the consumer and commercial lending space. And as the founder of several successful businesses, including a business call center automation company called Bypath, and of course, Loanspark. You've obviously been very much involved in the transformative power of technology in the fintech space. I'm curious, Michael, could you tell us what the key issue was that you were trying to solve with Loanspark when you first launched? And has that changed somewhat in the intervening space of time?
Sure. Well, thank you very much, Vinay, for the question. Thank you for having me on the podcast.
Pleasure.
Really excited about it and really happy to be here. So the problem that we're looking to solve at Loanspark was that we're at a point in the commercial and business lending where I think we're breaking out of this, what we call a Wild West landscape, and into a landscape where there is more standards, there are some more rules, let's call it, et cetera. And companies, banks, accounting firms, business service providers, et cetera, those organizations are looking for companies to partner with to provide their end users capital.
Mm.
And so we realized as a founding team that there wasn't really a good place to partner with. So if you are a company today who has a large segment of business customers and business users who may be also looking for lending, there wasn't a lot of great options in terms of partnership. You could either partner with a bank,
Mm.
you could partner with an online bank or a direct bank, or you could partner with untrusted brokers and untrusted platforms that really don't have an amazing track record of providing service to the end borrower. So that's something that we were looking to solve for. We wanted to fix that. So what we ended up doing is we built our platform around bringing an exceptional customer service experience to the end borrower. And we built our platform around fairness and what we believe is doing things the right. So in a nutshell, Loanspark was born. And Loanspark is a platform. We're a financial technology platform that does its business through partnering with other organizations like banks, processing companies, processing platforms, as I mentioned a moment ago, business service providers, accounting firms, et cetera. We partner with those companies. And not only do we partner with them, but we represent their brand in the market as a white label service. So for example, their customers are able to get lending through their trusted provider of their current services, but it's Loanspark behind the scenes that's powering those services. And I'm sure, as you can imagine, service has to be a big part of our company and a part of our experience because no bank is going to want to partner with an organization doing business under their cover that isn't providing an exceptional service experience and who isn't doing things the right way.
I'm surprised. I'm not in America. I'm in Australia. Perhaps you could clarify for me. Well, the time Loanspark launched, was there no other alternative, including some perhaps aggregation type services that would offer the best possible loans that a company could be looking for, which is perhaps not an unfamiliar kind of concept for most people?
Sure. So there are tons of aggregation platforms out there. You can just throw a rock out the window and you'll hit one.
Right.
There's that many. But when you think of aggregation services, an aggregator is almost like an intermediary that doesn't have any skin in the game or stake in the transaction.
Right.
Service really isn't there. Their focus is to act as just software that takes inputs And based upon those inputs, it generates outputs. So the input could be business is looking for a loan. What type of loan? What is your credit profile? What industry are you in, et cetera, et cetera. And the outputs are here are 5 lenders or 5 banks that you may want to talk to. And so then the borrower or the applicant, who's the business owner at that point, is now required to apply with 3, 4, 5, 10, 15. It's a headache.
Yep.
It's a lot of work.
Okay.
Who really wants to do it? Well, first, who really wants a loan? Nobody really wants a loan. Okay. Secondly, if you're going to apply for a loan because it's something that you feel is a part of it's a business need because of your
Mm.
business capital strategy. So it's a requirement. You at least want to make the process as easy as possible. And you don't want to have to allocate a resource in your company to manage the application process for 10 different banks.
Mm.
That's just not a great process. So what Loanspark does is Loanspark has built its own internal network of over 150 banks, including public, private, and also alternative banks. And so when a customer, a business owner is applying on our platform, we do all the aggregation internally. We then communicate the results to the client and we do it in a more curative way. So we curate those results. We then have a human conversation with the individual to pick and choose through the best results for their business strategy.
Mm.
So we do all that work internally for them. And then we help guide them to make the right decision at the right time.
Right. Brilliant. That's very interesting. So you're very much service focused and really helping to keep the existing relationships in place, which is very interesting. I'm also curious, given your journey to date, what would you say would be your personal area of strength?
Our personal area of strength is provide an exceptional customer experience. That's something that we built our company around. And so in my past, I worked at an organization that was the largest consumer lending organization that focused on private label, white label business. So I come from that
Mhm.
industry. And that's what I grew up doing. And that's what I know at my core is how to deliver a white label or private label service experience and do it the right way. So at our core, that's what we do best. And essentially, when a third party organization is partnering with Loanspark, that's what they're getting.
Hmm.
They're getting an exceptional customer experience backed up with some of the best business lending products in the world.
And in that area of strength of customer experience, what would you say is something that businesses don't know but should?
Wow, that's a good one. So I would say lending and getting a loan in its entirety,
Mhm.
it can be really easy. It can be really complex. It can also be a scenario. It's also easy to be taken advantage of.
Hmm.
It's very easy because there are things that a business owner or an applicant just don't know, may not be normal
Mhm.
in terms of the process, but because they have this need, want, desire, or maybe there's something happening in the business that's really it's a survival tool, getting loans or funding or fundraising just to stay alive. And so in those cases, businesses and business owners are prone to just sign on the line without reading the terms and conditions in the fine print,
Mm.
that you see on commercials, oftentimes that you can't really read it. So one of the things that we do at Loanspark is we ensure that we cover the fine print and we make the fine print known, because there's nothing worse
Mm.
to us than a customer experiencing buyer's remorse
Yeah.
because we left something out. And what does that typically turn into? A bad review.
Mm.
And what do bad reviews do for a company? They crush companies. And so that's something that most business owners, believe it or not, although they know that they should be asking more questions and they know that they should be reading the fine print, they often don't.
Mm.
Just like when we select, yes, accept all cookies when we get the website pop up, or we click the checkbox to opt in without reading the terms and conditions. I'm guilty. And I'm sure most, if not everyone who's watching this podcast is also guilty of doing that on a regular basis. So when it comes to the lending process, that's one of the things that our applicants don't have to worry about because we cover the fine print.
Right. Now, you've created a marketplace. So there's obviously two sides: there's the institutions and those looking for a loan. I'm curious, as you built this out, did you tend to focus more on one side of the marketplace as opposed to the other? If so, could you elaborate on that, or how did you find traction on both sides?
Okay. The way that we work is, as we discussed earlier, we partner with third party organizations and we deliver loans based upon our partners' customers. So, for
Right.
example, if we partner with a mortgage company, which we have mortgage companies who we're partnered with, we almost always see real estate transactions or mortgage loans. Commercial
Yeah.
mortgage loans is what we offer. And, or if we're partnering with usually, let's say, a bank, then we're usually seeing either unsecured loans or some sort of short-term loan
Mhm.
type of transaction because banks usually offer the mid to longer term loans in their own kind of internal portfolio. But then there's scenarios where they're looking for other products and the products that we typically offer are potentially the midterm, the short-term loans.
Mhm.
So initially when we built the platform, we picked and chose a little bit of each because we didn't initially know who our first customers were going to be.
Mhm.
And we wanted to ensure that we could offer a few products in each segment. Over
Right.
time, that grew. So now we have equal parity across our entire segment of products from commercial real estate to equipment leasing, where there is short term working capital loans, long term loans, SBA loans, loans that are fixed for 10 or 30 years. We've covered the market in terms of product at this point. But in the beginning, as you can imagine, starting up a new company without any customers, you don't really know who your first customer is going to be. So your goal is to appeal to whoever that first customer is.
Mhm.
And so that's where we started initially. And then things really grew very quickly once we launched our first few partnerships. And now we have many partners.
Hmm. Right. Your primary customer segment, if I'm trying to understand this correctly, are financial institutions that you tailor your services to. I would imagine, though, that different institutions operate differently. Now, obviously, you have a technology platform that kind of syncs in with their existing processes. But would you say that there are perhaps somewhat significant operational tweaks that need to be put into place as you deal with each particular client?
From a client, a bank,
Mhm.
if we partner with a bank, or is there like an operational lift
Yeah.
that has to happen in order to make it all
Mhm.
happen? Actually, there isn't.
Oh,
The
okay.
way that we've built our technology
Right.
is that we can actually deploy a relationship with a bank or anyone
Mhm.
for that matter in as little as 7 days.
Right.
So we have the super light integration. And then there is, if you really want to get fancy,
Mhm.
there's the heavier integrations.
Right.
But really, any organization that has a customer base where they're looking to offer business purpose loans or commercial loans to that customer base, and they'd like to do it in their own brand name. Now, we also offer you can do it in Loanspark's name as well.
Mhm.
But if they want to offer it in their own brand name or in Loanspark's name, we can deliver the services and have all of our technology up and running and ready to go in about a week.
Wow.
So
Okay.
the lift is very light,
Mhm.
and we built it that way on purpose because we know that we, our goal is to allow our customer to integrate fast, hit the ground running, and lower the barriers to entry in partnering with a company like ours.
Hmm. So, apart from the range of choices that, say, a bank or other financial institution is able to now give their clients, as well as the tailored approach to processing a particular loan, are there other significant benefits that we haven't quite covered as yet in using the Loanspark platform?
Sure, there's huge benefits. I think depending on each of our clients has different use
Mhm.
cases. So there are benefits to one business, one partnership that may not be a benefit for another partnership. So for example, some of our partners come to us because they are looking to retain customers that are walking out the door to other platforms
Right.
or other providers.
Mhm.
For example, regional banks are looking for banks, if not regional and national, they're looking for deposits. They want
Mhm.
more deposit customers to come into the bank and park their money there. And one way that banks attract deposits is through lending. Lending is also a benefit that they provide to their customers for being customers.
Mhm.
So when a customer looks to get a loan, a business customer, if they can't get approved for, let's say, the bank's internal program, well, what does that customer do? It's a natural reaction. They're going to call another bank, or they're going to reach out to another platform that may offer banking services. And so, what does that mean for the declining bank? For the declining bank, it means that you may lose a customer. You may see assets walk out of the door because you are not able to provide a service to that client.
Mhm.
So, in that case, the bank is looking to retain customers and stave off losses. In other cases, the partner may be looking to add an additional revenue stream to their business. Maybe it's an insurance company that doesn't offer lending, and they see some of their other competitors are offering lending services through partnerships, and lending is a revenue stream for the business.
Mhm.
So that is oftentimes a large benefit that we see and a reason why businesses are partnering with us. Revenue generation or retain customers to protect your current ecosystem,
Mhm.
two big ones. Another is there are other organizations who partner with us who aren't in lending at all. We have startup companies who want to be in lending and they want to become a lender, and they partner with Loanspark to fulfill their dreams of
Mm.
being a lender, because you can start a business, do the things that you need to do to start a business, create your branding, your marketing, create your go to market strategy, and partner with Loanspark on the back end to drive your lending mechanism.
Mm.
So those are three reasons that we see very often. There's other reasons as well, but those are some of the three reasons that we see why those are partnering with us.
So, in the not so distant future, or perhaps distant future, would you say that Loanspark is literally democratizing the way loans or financial loans can be acquired, at least in the United States of America?
I would say we are in a big way. Not only are we making access to capital easier
Mhm.
for everyone who applies through a partnership that's utilizing the LoanSpark platform, but we're also making the process more transparent, and we're making it better, especially for those who may be demotivated to apply for capital because they thought that or think that maybe I wouldn't be approved, or my demographically banks don't approve me, or they wouldn't like my business. The Loan Spark, the way that Loan Spark and the way that we have built our marketplace, we're able to serve almost any business in any market, in any industry across America.
Hmm. Given that pretty much anyone could be able to access your platform and use it to secure loans or certainly apply for loans, is there going to be a competitive advantage for financial institutions, at least in this loan space, through some unique offering that they're able to distinguish themselves from their competitors?
Absolutely. The unique offering that all of our partners have is the ability to offer a wide range of lending services. For example, and I use the bank analogy because most business, if not all
Mm.
businesses, bank with a bank, right? That's where we all store our money. And that typically is the first thing that we think about as consumers and as business owners in terms of lending. So yeah, when you're applying for a loan with a bank,
Mhm.
typically the bank has a few programs. They got a few programs. There aren't many. They have their asset based program, which is going to be a real estate program or a leasing program, and they have maybe a term loan program that may be unsecured,
Mhm.
which is secured by the business's assets, whatever it is. That's usually it. With When they partner with Loanspark, not only do you get additional programs that you can offer in those categories, but then you get programs that you wouldn't have offered or you didn't think to offer.
Mhm.
It's too challenging for you to offer, or you didn't want to invest in just because the risk was too high to experiment with these new types of programs.
Mhm.
So instead of needing to go through that R&D process, going to a board, getting it approved, getting the funds allocated, all the licensing or the restrictions, you don't have to worry about any of that. So we truly serve as a huge extension to any of our partners' product menu. So if bank number one is partnered with Loanspark or any partner is partnered with Loanspark, when they're comparing themselves to their next closest competitor who's not partnered with Loanspark, they have a significant advantage through the diversity of our platform.
Mm. If I could put this another way, you're essentially allowing financial institutions to be creative in terms of the structure of the loans and whom they're targeting. Would that be correct?
That is correct.
Okay. And certainly opening up a range of other possibilities. So really, all they need to do now is to focus on the creativity of these market segments they wish to operate in, as well as the marketing of their business.
Absolutely.
Okay.
If you think about it,
Yeah.
if I was a company who's partnered with Loanspark and I only offered, let's say, one product, but now through my relationship with Loanspark, I can offer 10.
Mhm.
What that opens to it opens the door for me to be able to market these additional 10 products.
Mm.
And that does two things for me. One, it creates additional product interest, which generates additional revenue for my business because now I can sell things that I wasn't able to sell before. So I have new products to sell.
Mm.
And secondly, what it does is it keeps my customers close to me because they already trust my brand.
Mm.
They've been doing business with me already. I'm offering now these new ancillary services. Now they're less motivated or less inspired to talk to someone else where they don't have that relationship.
Makes a lot of sense. I can't help but think, is this something that you could or would extend to perhaps venture capitalists looking to invest in businesses as a platform to allow for greater reach and for customers to be able to perhaps not spend so much time going through the motions of pitching and things of that nature, maybe simplify the process overall.
We wouldn't, I don't see our platform right for the VC
Mm.
world to use as a deployment strategy. Uh, I can see Lone Spark properly used in the VC's portfolio of customers
Mhm.
that they've invested in, more so than a
Right.
vehicle for the VC to use directly.
Mhm. Okay. Appreciate that. I remember from our earlier conversation, you mentioned that commercial low interest rates are often misunderstood. Could you elaborate on that and perhaps provide a few examples?
Yes. So commercial loan interest rates in comparison to consumer lending, I think oftentimes are misunderstood. And they're often misunderstood for the inexperienced borrower. And I can imagine because if I was in a borrower's shoes and all I really had experience with is maybe a car loan and potentially a mortgage, that's really my window of experience.
Mm.
And as we know, the car business is a whole animal of its own. Usually it's something that most people aren't very motivated or inspired to want to even do, but it's a have to.
Mm.
But on the mortgage side, one of the things that we see as consumers often is mortgage rates are up, mortgage rates are down. The economy is affecting the mortgage rates. How low are the mortgage rates today? And then trying to translate what that message. And so the first message that's the truth, that is a truth, is that commercial loan rates are higher or more expensive than a consumer loan. I can go into all the reasons why, but they are. And so that's one of the things that I think most borrowers don't necessarily understand
Mm.
until they're speaking with a loan officer, or in our case, our loan officers are called small business advocates. And when you're speaking to one of those individuals who then tries to explain the difference, oftentimes a borrower can get uncomfortable and then wants to do their own research because they don't understand. And I
Mm.
get it, because if I was in their position, I would feel the exact same way. However, the difference between consumer lending and business lending, the only similarity is that there's money at the end of the transaction.
Mhm.
Otherwise, they are so different.
So, for someone who's perhaps looking to get into this for the first time, what would you recommend as a base level educational process?
Someone who's looking to get into lending or who's
Acquire a loan, yeah, and needs to
okay.
understand the nuances. Where would you recommend they start in terms of an education process?
Okay. The first thing that I would recommend, and I don't get paid for this, it's
Mhm.
not a paid plug, but there's a really good book. And the title of the book is called Spank the Bank. You can find it on Amazon, and I'm sure other places as well. And it is a great book to help a small business owner understand the options that exist in relationship to obtaining a business loan.
Mm.
What options exist, how they should prepare themselves, what their business, what is good and what is bad in terms of the types of data that they may be providing to the bank unknowingly.
Mhm.
So what do they want to provide? What should it look like? How does a bank make a decision? How does a bank or an alternative bank or lender or private or public bank or lender view them as a borrower? And I think that's really important to understand, if you can, before you start the lending process, because that just helps narrow your focus
Mm.
and narrow your window of expectations. And that would enable you to get things done faster for your business.
Could you highlight perhaps a couple of other misconceptions or challenges that borrowers face when considering commercial loan?
Sure, I can. One of the things would be the first thing that we've already spoken about is interest rates
Mm.
are expected to be the same as they would be
Right.
for a consumer loan. So that's one misconception. Two, getting a loan should be free. There's no costs associated with
Mhm.
it. On the commercial side, that is almost always false. In some cases, for a commercial loan, the customer has to make deposits up front
Mm.
in order for the bank to even process the loan, depending on the type of loan that you're working on. So that'll be number two. Number three, the business loan process is fast. Overall, that answer is false. With Loanspark, it's fast,
Mm.
but overall, the business loan process is not fast as compared to a consumer loan. Consumer loans typically can take a couple days
Mm.
or maybe a week or so, and the general or average business loan can take over a month. On our platform, generally, we're funding most of our transactions in about 7 days. When you look at the entire market, the loan process for a business is not a fast one. It's not quick. Um, Trying to think what else. Oh, the fourth thing, and I'll leave it at
Mhm.
this fourth
Sure.
item. Uh, Documentation. Documentation is very important in the business loan process. And it's very important that you're organized and you're able to just deliver the lender the right documents at the right time.
Mhm.
And so a misconception would be that business loans require a lot of documentation. And that's not necessarily the case. There are many cases, at least with Loanspark, where we can fund a loan with 4 pieces of documentation. simple. Right? Business lending can be very simple. It can also be very complex.
Mm,
But a misconception would be that the business lending process uh, requires a lot of paperwork.
mm.
That would be false.
So there's obviously an education process that certainly is required before you get into this whole loan seeking approach. I'm curious, would you say that the current state commercial lending market, especially in North America, has impacted borrowing, or at least perceptions of borrowing? I'm curious, what trends are you noticing, and how is the market being affected?
I think economic factors have affected borrowing.
Mhm.
I think when you see or when you hear on the news that the economy may be moving in one direction or another, a lot of what we're hearing is opinion. And when enough opinions are amplified, then that begins to impact potential consumers' behavior,
Mm,
whether those opinions are true or false. Okay.
mm,
But what I've seen is that I've seen a lot more shopping around these days because interest rates have overall risen. But the thing is that interest rates have mostly risen on on consumer loans, mostly risen.
mm,
So when we think interest rates, we're thinking mortgages, we're thinking, usually consumer bank loans in America
mm,
when we're thinking about interest rates. If you ask the average American about interest rates, that's the answer that you'd likely hear. The interest rate that I'm paying on my mortgage, or maybe the interest rate that I'm paying on my car loan. But as we know, there is many types of vehicles that exist besides mortgages and car loans.
mm,
They may be the biggest. But when you look at the interest rate trends as they've increased or as they're increasing or decreasing, most Americans equate that to mortgages. But when you look at business lending, interest rates really haven't gone up that much in comparison to how much they've gone up on the consumer side.
mm,
But still not knowing, just most consumers don't understand or realize that. But what it's done is it's caused a behavior of over shopping. So shopping too
mm,
much, trying to find, of course, we should always try to find a good deal. We want a good deal, but sometimes a good deal is more than just price.
mm.
And what we found is some clients overshop. And what happens if you overshop, you oftentimes end up getting a worse deal when you overshop. And that has been caused, what we believe, by false indicators. So the cost today for a business loan versus the cost a year ago isn't really much different at all.
Mm. I wonder if you could share insights into opportunities and strategies that businesses could potentially leverage to acquire commercial loans in today's market.
Sure. I would say the opportunities that exist right now would mostly be, in my opinion, uh, for uh, businesses, industry based loans
Mhm.
are where there's an opportunity for businesses to get the best terms for a loan. For example, if I was an e-commerce store, an Amazon reseller,
Mhm.
my business is based on Amazon and Shopify and in that world, there are platforms like Loanspark and lenders directly who specifically focus in that segment. And because they focus in that segment, their credit models are tuned to make decisions specifically for that segment. And because of that, they're oftentimes able to make a better loan package
Mhm.
for the borrower than, say, if you were applying for a loan through a generalist. For example, most banks are
Yeah.
generalists. So if I'm applying for a loan with a generalist who doesn't know my industry as much as a specialist does, then that could affect my loan terms. So it's also one of the reasons why we built our marketplace chock full of specialists
Mm.
of industry within the Loanspark marketplace of lenders. So we have specific industries where we've selected lender relationships to help our borrowers in some of those bigger industries.
Hmm.
So I think that's one big one that a lot of businesses may not necessarily think about from a restaurant. Maybe I apply with a lender that specifically caters to restaurants. There is a high
Mm.
chance that lender, bank, alternative bank, etc., may be able to offer better terms than someone who's a generalist.
Absolutely. I'm hearing a lot about customers' experience, and we certainly talked about it at the start. But I'm curious, who or what would you say has influenced you the most in terms of building out the customer experience to what it is today?
Very good question. So going back 22 or 23 years ago, when I mentioned to you earlier in our conversation where I had worked
Mm.
for the largest provider of private label and white label consumer loans. And one of the clients that I represented for that company was USAA. And if you anyone can go online right now and look up USAA satisfaction scores, and they always rank at the highest levels for customer satisfaction in financial services and other services. And so through my time, spending time delivering services for a company like USAA, who is always ranked at the highest levels, that was really where I built my pedigree
Mm.
on how to deliver an exceptional customer experience. It was through that experience. And then, of course, honing it over the years, building it into a strategy, and then deploying it here at Loanspark is something that's been very special for me.
Certainly. And do you benchmark it in any way, or is this purely values and principle driven?
So it's our values.
Mm.
And on our website, it's a part of what we do and what we promote. But how we measure it is through survey. We measure our customers through survey at the end of each loan that we fund.
Mhm.
It's interesting that even our internal employees are incentivized for positive reviews. When they get reviews, they're incentivized for it
Mm.
because we want to ensure that our employees are focused on the right behaviors.
Mm. Right. Um, Obviously, it is a key driver of growth for your company. But I'm curious, what else would you say has been a key driver, especially over the past year, of growth for Loanspark?
I would say a big driver for growth for us has been the general market. I would say a lot of companies are afraid when the market is down or trending down.
Mm.
And that may even take a huge bite out of their profits. And I think there is the perception component of it. Market's down, so we're not going to do as well. And I think then employees can adopt the mindset, including
Mhm.
senior leadership can adopt the mindset that because things are trending in a direction, that's just what it's going to be.
Mm.
But at Lone Spark, we've actually taken it as an opportunity to partner with third party companies and show them how in a market that may be trending down, you can still win and you can still win economically through partnership.
Mm.
And when partnering with Lone Spark, not only do you get a revenue bump, but there's also a huge opportunity for you to retain customers, build a new business segment, and do a lot of things that you may not have been able to do before without the operational expense or the risk that you would need to take doing this by yourself.
I'm curious, you've obviously grown quite fast right across the United States. Are you looking at expanding your portfolio to beyond the US, or are you very much focused on the US uh, looking into the future?
We are 100% focused in the US, and we believe there is a huge market opportunity
Mhm.
here. And the when you look at the addressable market, we've only scratched the surface. We have programs that enable us to lend in Canada. So we do
Right.
some business in Canada. I wouldn't say it's a large segment of our business, and I wouldn't say that it's a huge focus for us, but it is something that we do, and we do have the capacity for. When we look outside of the United States, I wouldn't say that's something that we would look to do anytime in the next couple of years.
Hmm.
We'll focus here and then we'll decide on a growth strategy likely in a year or two.
Okay. And as you look to the future of lending, at least within the United States, what do you see as key trends that Loanspark needs to get ahead of or certainly adapt for?
I think less trends and more of sharing and more, I think for us, it's more of just getting the word out that we exist
Hmm.
more than, in my opinion, trends.
Mhm.
And the reason behind that is because whether the market is trending in either direction, partnering with LoanSpark makes sense. Whether the market's down, whether market's up, whether your business's revenues are up or whether your business revenues are trending in the other direction or flat, partnering with LoanSpark still makes sense in either direction because we serve the need of helping businesses grow.
Mhm.
That's what we do. We help our partners grow. We help our partners uh, maintain their brand recognition and brand security in the market. I'll give you a good for instance. There are some companies, could be banks or other types of organizations, who partner with third parties for lending, but they do so more of as a referral. So we have a customer who we couldn't get them approved, or they came into the branch and they wanted to apply for a product that we don't offer. So we're just going to recommend they call XYZ company,
Mhm.
some third party company. So that isn't really serious. That's just here's a card, call this person, and maybe they can help you. Just imagine how that feels as a customer of the bank. Oh, the person recommended me call this other company. It just doesn't feel as personable. So no matter what, the Loan Spark process allows the symmetry between what's happening inside of your company and then the third party, us now, Loan Spark as a third party, being able to operate as them
Mhm.
or as you, if you're a listener of this podcast. It really helps keep that brand symmetry. And I think that's independent and agnostic of any trends that may be happening within a business or in the market. That's something that's important to almost everyone who's operating a business.
Brilliant. Um, I'm curious, given this area of partnerships and lending, would you say that there are perhaps a couple of areas that you find don't get much airtime? If so, what would they be?
I have to scratch my head on this one. Areas that don't get much airtime. You may have stumped me there, Vinay. You may have stumped me. And I will say, I definitely don't know everything. And I don't propose that I do.
Sure.
This is one that I would have to think about. I'm not really sure what doesn't get enough press. If I wanted to focus on myself for a moment, I could say that, not that I'm trying to do that
You're
here,
right.
but I would say that what we do as a company
Mhm.
for the market as a whole doesn't get enough airtime. And it's hard to when you are representing another brand. For example, let's say we were representing your company, Vinay, and you were a company that was doing lending and you partnered with LoanSpark and LoanSpark was doing all the lending for you. Well, when anyone is recognizing Vinay
Mm.
or Vinay Corporation for your lending in the market and how great of a lender you are and the awesome service that you're providing and the customer experience and Vinay, your software is so awesome and it's high touch, great experience. Vinay would be getting all of the recognition, not LoanSpark,
Well,
because we are the biggest company that nobody knows
mm.
because you don't hear the Lone Spark brand, you hear Vinay, you hear USAA, you hear the brands are the ones who get the
Mm.
recognition, not Lone Spark. So that is one of the downsides to what we do is because we're representing others, it's others who are able to really get the reward and the recognition. And we're happy about that. And we're proud of that. But that is one of the things that I believe doesn't get enough recognition.
That's an interesting perspective, I wonder if you could elaborate. Is this intentional on your part? And the reason why I ask is, in my opinion, this is still a good story, even if you don't have the names and the logos to talk about, given the nature of the industry and the things that you do. But the breadth and scope of what you're doing is still an interesting story that I'm sure would be of interest to at least some outlets. So is this intentional on your part or something you just haven't quite addressed at this point in time?
I wouldn't say it's intentional,
Mhm.
but what I would say is we know.
Right.
And we knew that when you are, let's call it an outsourcer of services, that's a part of the model.
Mhm.
A part of our model is making our customers look good. And that's what we take a lot of pride in that. And the better we make our customers look, the better experiences that we can create on behalf of our customers,
Mhm.
the more reward we get as an organization, because that's what we do.
Right.
It's almost like a ghostwriter.
Mhm.
Ghostwriters write books and music and all types of things for other people that put their name on it.
Yeah.
But the ghostwriter knew what they were getting into,
Mm.
right?
To wrap things up, Michael, if you were listening to this podcast episode, what would you say would be your top takeaway?
Uh, my top takeaway would be that partnering with, if I was a company looking to enter into the commercial lending space, or if I was a company looking for a commercial lending provider, I would say, wow, Loanspark sounds pretty awesome. But besides Loanspark, just besides all of that, what I would say is there's definitely some things that I want to research to understand the type of company to partner with. I'd want to likely focus on, from what it sounds like, is customer experience, a company who is where customer experience is at the center of what they offer, an organization that offers a number of products and programs to help solve the needs of my prospective borrowers. Also, an organization that's very transparent and is looking to tame the Wild West
Mhm.
versus be a part of the old Wild West. So that's that. And then on the other side, if I was a borrower, um, one of the takeaways that I would bring from this podcast would be go get the book, Spank the Bank, and do my research. Again, no plug. Love the book. We use it in all of our trainings internally. I've been using that book for more than 10 years,
Oh,
training
wow.
sales teams in organizations for years. Great book. So I think those would be a couple of my takeaways from this session.
Michael, this has been terrific and very enlightening. If listeners are curious, want to find out more or connect with you, where would you recommend they head to?
I would recommend you go to www.loanspark.com. And if you are interested in partnering with us, there is a button at the top of our website to schedule a meeting with a member of our team, and they would love to speak with you about Loanspark and about how you could expand your product menu or just enter the commercial lending market to offer your customer commercial and business purpose loans.
Okay, terrific. We'll include links to that in the show notes. Michael, thank you so much for sharing.
Thank you very much. Happy to be here. Thank you very much for asking great questions and providing an opportunity for the listeners to really learn a lot more about the business lending landscape.